All right, today we're digging into a pretty incredible financial story. How the home and hotel furniture category went from being deep in the red to becoming wildly profitable. And they did it in just 2 years. And that's the question, isn't it? It's the big mystery we're unpacking today. This wasn't just some small recovery. We're talking about a complete financial 180 that just begs for an explanation. So how in the world did they pull this off? Okay, so to really get how big a deal this is, let's rewind to 2023. Back then, the average profit margin for this category was negative 1.8%. Think about that. For every $100 they brought in, they were actually losing almost 2. That's not exactly a recipe for success. But then, you fast forward just 2 years to 2025, and that negative margin has absolutely rocketed to a positive 43.7%. That's not just getting back into the black, that is a colossal leap into serious profitability. So, what on earth happened here? So, to figure out this margin miracle, your first thought is probably revenue, right? Did sales just go completely through the roof? Well, let's take a look. And look, the revenue growth was impressive, for sure. It peaked in 2024 and was still way up over 2 years. But, and this is the key thing, that growth, as good as it was, just doesn't explain this massive jump in profit. The real story, the secret sauce, is on the other side of the books, the expenses. Right, and that brings us to the heart of the matter, the costs. I mean, to go from losing money to making a nearly 44% margin, you've got to be doing something totally different with your spending. So where did all these huge savings come from? Okay, so if you look at where the money was going in 2025, no surprise, the cost of materials is still the biggest slice of the pie at almost 34%. But here's the thing, that number is actually the biggest clue. The fact that it's still the biggest expense, even after everything changed, tells you just how gigantic it must have been before. And boom, this right here is the whole story. Back in 2023, the cost of materials was eating up almost 80 cents of every single dollar they brought in. I mean, that's just staggering. Fast forward 2 years, and that number is cut down to less than 34 cents. They basically chopped their biggest expense in half as a share of sales. That's how you completely rewrite your financial future. Okay, so this incredible internal cleanup job, it didn't just happen in a bubble, right? We have to zoom out a bit and look at the bigger picture, because this whole turnaround happened in a pretty sweet market environment. We're talking about what are called market growth drivers. You can think of them like tailwinds, these big trends that are basically pushing the entire industry forward. You know, a rising tide that lifts all boats. And it turns out, the Indian furniture market has some seriously powerful tailwinds pushing it along right now. You've got rising incomes, so more people can buy nicer stuff. You've got this huge wave of urbanization and a booming real estate market, which means constant demand. And on top of all that, people want custom, high-quality things more and more. But you know how it goes. A booming market is great, but it's not all smooth sailing. With these big opportunities come some pretty significant risks that these companies have to navigate really carefully. So risk number 1 is something called concentration risk. Basically, it's the old don't put all your eggs in one basket problem. If a company is relying way too much on just a couple of products, say sofas and recliners, and demand for those suddenly dries up, well, you can see how that would be big trouble. So what's the fix? Well, it's all about diversification. And we can see right from the source, management says they're actively tackling this. They're moving into new areas like kitchens and cabinets to build a much more stable, well-rounded business. All right, the next big challenge, the supply chain. And this one's a biggie. We just saw how critical material costs are, right? So any kind of delay or problem getting those raw materials is a huge risk to the bottom line. And again, the strategy here is to get ahead of the problem. As this quote shows, they're not just sitting back and hoping for the best. They're sourcing materials from all over the world and trying to get more stuff locally. That way, they're not so dependent on any one supplier, which gives them a ton more flexibility. Okay, so let's put all the pieces together. We've got this massive internal effort to get costs under control, happening at the same time as these strong market tailwinds are blowing, plus some really smart, proactive risk management. So what's the final outlook? So let's just boil it all down. The key takeaways here are, 1, a jaw-dropping profit recovery that was all about controlling costs. 2, the single biggest move was just crushing the cost of materials. 3, all of this is happening in a market that's got some real momentum. And finally, and this is super important, the key risks are being actively managed to keep the good times rolling. And that really leaves us with one last big question to think about. They've fixed the numbers, the business is humming, the market's growing. So what's next? Is the next chapter for this industry all about pushing the boundaries of design, innovation, and sustainability? That's definitely something to watch. Thanks for joining us.